Sunday evening here as we are going live before the start of this upcoming week. The last day of January and the first days of February this year we have to dive into here, 2022. So I want to talk about, of course, how futures are setting up, the stock market look for next week, some key levels to watch, and of course we'll dive into 3 stocks that I've been watching, or at least that are on my radar for bounce backs or just of interest, right? For either bounce backs or for more downside if we do see that. But the key here, I think, this week, and until it proves otherwise, it's going to be the key. The market is telling us essentially or guiding us, right? So there's a lot of stocks that can bounce back 20, 30, 40%, but the market needs to kind of stabilize and continue to bounce back as well, right? If we take a look at the S&P, and if SPY doesn't go back up towards those levels, let's go look at I'll just pull up what we recently viewed right there. If we go to the S&P 500, right, we go to SPY. If SPY doesn't bounce back up into the 350s, or the 450s, I mean, well, then a lot of these stocks are not going to bounce back 10, 15, 20%, right? These stocks are down, 50+% from their highs. There's a couple of cool things I want to pull up, and I want to mention. Let me get the chat pulled up here on my phone so I can see things. I know the games are on. I got the game on the back screen behind me, but hopefully we can kind of dive through this stuff relatively quick. And then, watch the second half and all that stuff. Bengals with a nice win, which is honestly, I was pretty impressed by that. But all right, so here's the S&P. Right, very nice, strong, very, very strong close. But we eventually, we closed. Eventually, we literally closed right at the top of the range. So we still didn't break out of the range, right, from last week. We kind of are bouncing around. We need to get above the 200 moving average, that orange line right there on the daily. So you got to get up realistically, 445, a close over 445, at some point this week would be really nice on the S&P, but we'll see if we get that. So, greetings from the ski slopes in Whistler. Awesome. I want to make it out to Whistler at some point. Going to Montana next weekend, early the week after that. So I'm going to be up in Big Sky. That should be a lot of fun. My brother goes to school nearby, so making the trip out there, which should be a lot of fun. But usually, hopefully, at least try to get out once a year from the Northeast. So I, have a decent, I would ski all the time. 5-10 times a year. Local mountains and some Vermont places, and some in the up in upstate New York and whatnot. But out west is a different game, and it's a lot. I love it a lot more. Snow quality and a lot of good stuff. So it's all good. Tesla, Nvidia. We can talk about that. We can talk about Bitcoin as well. Okay, let's talk. We'll pull them all up. Here. So that's the S&P, right? We got to break out of this range, and then we'll talk about those stocks that I like for bounce backs. And we're talking mostly large caps. And then there's one small cap that I think is worth keeping on radars because it continues to get some really big insider buys. And so we'll see how that one plays out. We kind of saw how that played out with OEG. OEG had some big time insider buys, or at least it was getting a lot of insider buying activity. And the stock, that was when it was up here in the 250-ish, 225 range. But that insider activity kind of was quickly quieted down. Not that it's still is a factor, right? It's still a player, right? The CEO, I believe, was buying, but the stock is down huge since then. So it doesn't really matter. Just because a stock gets insider buys does not mean that it has to go up by any means. So we'll talk about that. Let's pull up Bitcoin just to get a feel for the overall sentiment there in crypto. Here's Bitcoin's chart. I still, here's this downtrend. I got to extend this down. I still see that downtrend holding. So unless Bitcoin gets up into the 40s again, that downtrend is going to hold, and we'll see if it can, if it can reclaim. But I have a target down here towards 30,000 or so. And below that, it can go down a good bit, down sub 20K, I would say, potentially, if it can't hold 25. But okay, we'll cross that, we'll cross that bridge when we get there, if we get there, And I would say with the weaker market, I would imagine Bitcoin stays weak too. That's just been the correlation we've been at least watching and seeing. All right, so Tesla, let's pull up Tesla. Tesla did not have a great week last week, but it bounced right here. It looks like $800 or so. Yeah, it dipped just below $800 briefly, but then it bounced 800. So if Tesla can hold 800, there's the 200 MA right there is right above 800, 815 or so. And then we got this line right here, which was the prior area that we really were struggling to break out of on the initial run up a few months back, back in the fall. So once it broke out at that 800 level, it kind of went on that parabolic run. And that's part of the crazy move that Tesla had. But it's back down. It's given a lot of that back, kind of chopped around. And so now we'll see if this area can hold and we consolidate further, or if we don't, we can be dropping down 750-ish area very, very fast. But the market may save it. So if the market shows some strength, the market could save things. If the market doesn't show some strength, and we break below last week's lows, then yeah, Tesla can come down a lot. It's been weak. So it should be an interesting stock to play based on some of these key levels that we kind of have. So these broader areas of support resistance, based on that, plus factoring in the overall market direction, if we get a better feel for the overall direction, that's, kind of the gist of how things have been playing out. Same with Nvidia. Nvidia, let's see how it finished up last week. So yeah, it kind of fell below this channel that we had, this downtrending channel, and now it's getting stuffed by what I mean by that is it's not getting back up to to break back up into that channel. So here's the channel. If we continue it across, you see how last week on Wednesday, Thursday, it kind of got stuffed and it couldn't get it back up there. So we got to get this thing back up over 245, 250 would get you back into the channel, and you want to see it holding up into that level. Then you look for it to bounce back up and potentially test the top of the channel or up towards 285 or so if it really has that strength. But it's given a good bit back as well, and so it's kind of into where it was back in the fall and even late summer of last year. So some healthier pullbacks. But when you broaden things out even more, you can kind of see a lot of these stocks, just chart-wise, they can easily pull back further. I think the question will be really what the overall market wants to do and how that plays out. So that's really going to be, ultimately, I think that's what you got to look at. As much as I hate that, because I definitely like when you have an environment where you can be more of an individual stock picker in a sense, where you can find undervalued stocks. You can kind of look for that mismatch. We in this environment, we just haven't been able to see, or we haven't been seeing that. Eventually that'll change, but we just haven't been seeing that. And maybe at some point we get that in the coming weeks and months, but for now we haven't. So you take, I like playing the bigger name stocks, the large cap stocks that have a lot more range than the S&P or the NASDAQ or the Dow, and playing them, you can play them up or down, it doesn't matter. Play them up and down in this range, or with the overall market to guide you. So that's that. Let's look at QQQ. Just look at tech and how this is setting up for this week. So it kind of closed up over this 350, which is good, but still needs to get up, and I want to see one or two more closes over 350. For that to continue, or for that to build up back to the upside. If not, that we're still kind of at resistance. So, look at the lows. We're pretty much at the lows from back in October. So from the tech sell-off back then, we had a sell-off from early September through early October, and we're pretty much at those lows. So that could be an area of resistance now, prior support becoming resistance. So we'll have to clear. You got to get some strength into these levels, into the 350s, and even get up into the 360 range for me to feel better about QQQ's building support, at least for now. Before we dive into those three stocks, I do want to pull up something really quick over here. Oh yeah, here's futures. Let's pull this up. Let's refresh this really quick. And let's look at futures. So as we speak, this is going to change, obviously. And I will say, I know it's been earnings season, but I haven't seen futures as volatile as the past couple of weeks, or the past 2 weeks. Really last week specifically, honestly, in a long time, if not ever, at least to my recent memory, right? Now, obviously, there's crazy action that can happen overnight. News, there's this, there's that, right? But just the market closes to the next open, the amount of volatility we're seeing in just the after hours, in the pre-market hours, and futures, a 1% move can easily be given away or taken right back. It's just the way it feels. So they're down about 0.25% roughly. Tech down a little bit more. Small caps a little bit less, but I'd say roughly about 0.25% across the board, on average for everything. So we'll see how that plays out. Again, you have to take into account too that even though everything is down a lot, here's how we finished up on Friday. Pretty much, on this pullback, we just took a slingshot, pulled back, faked out, and then just ripped straight into the close, straight up into the close. So QQQ went up from those lows in that pullback. This thing pulled, a 2.5% move into the close, which is pretty impressive. So just take that, understand that too, because while things kind of floated higher in after hours, a 0.25% push or a gap down, if we were to open up 0.25% lower, like futures are indicating right now, right from where we closed, or it's like right here. So 0.25% is nothing. If we're down 1%, 0.5%, or 1%, then that could be a little bit of a bigger move back down. But 0.25% realistically, especially with the volatility we've been seeing as of late, that's nothing. Just as of now. Okay, let's see. So looking at MVOS, I have no intentions to sell that thing, at least at the dead bottom that it's setting up as. Low float, we have a company that's growing underneath the current market conditions, and I like those setups. And they should report the next couple earnings should be solid numbers. And so until we see a better or a cleaner or at least a better condition or better market for low floats, it's going to just kind of float around. And there's just absolutely no volume. It's difficult to even talk about because there's just no volume. So it's not like, okay, like I can just go and say, okay, these stocks are looking pretty good in small cap land. The ones that are the best are the ones that have already run. So I'll pull up XELA really quick. But XELA is one that popped. It's a prior runner, so it has history, right? You zoom this thing out on the daily. It has history of making some big runs in the past. It's sold off a ton, right? It kind of bottomed out or hit new lows, right? Hit like 2-year lows or, at least, it's almost 2-year lows, right? Yeah, pretty much. And then now it pops up. I believe it had news or something happened, and then it pops up, hits 75 cents, pulls back. But what did it do? It kind of consolidated here. It didn't drop below 53, and we kind of had this upper area to 60 cents. And now, as long as this kind of range holds up on XCLA, I like it. That's the type of stuff because there's volume here. But across most of the other small caps, there's not. And that's just my style and strategy too with my small caps. Yeah, I'm holding a lot less than I would normally do. And just because personally, the market's just it's not good and it hasn't been good. And I definitely should have adapted that earlier, but it is what it is at this point in the game. And when it comes to these small caps that we're seeing, right, or these micro caps, really, because small caps, these are some of these stocks. AMC is technically a small cap, right? But it's got a much bigger market cap than, XCLA has a 100 million market cap. That's like a micro or almost like a nano cap, right, stock. So we're dealing with a lot of these micros or nanos. Any of these micros or nano caps, right, eventually they're going to have their day when things heat up, or they can easily kind of run off of news, or they get spiked or pumped or whatever. But you guys can see, I think it's very, very, very clear and apparent that you guys can see why they're the people who potentially, right, are trading these things every single day. Small caps, there's momentum trading, and then there's pumping, right? So you may look at some people and say, hey, how do these guys, always make money on these stocks? They come out of nowhere and this and that and the other thing. Well, when you're able to provide, that volume that these stocks need to get attention, and you have followers to do it, it's not that difficult. And so at the end of the day, you can kind of see that a lot of these recycled plays keep getting recycled back and forth because there's some volume there. And all it takes is a surge of volume from followers, from a Discord group, or from this or that. Surge more volume, hit the scanners, and then the momentum's there. And these are stocks that kind of get traded up and down, and they kind of do their thing for some time. That's what's working now. Eventually it won't. I don't like that stuff, number one, because risk reward, when you have offerings, reverse splits, and when you're in penny stocks, there's a lot of downside risk after playing something that's already up 50 to 100% off the lows, right? I don't like that risk reward personally. But also, right, if you don't have, or if you're not pumping, or if you're not, pounding these things into social media platforms, and there's no volume, these things doesn't matter. They're just going to float off lower, and you kind of see how this game works. It doesn't matter if the company's doing better or worse or this or that. So that's just the nature of small caps right now, which it is what it is. But that's how I like to play it because, when you play these things at these lows that are not being talked about, that are not popular trades, the moves that they can kind of blindside people in a sense of all of a sudden things up 100%, 200%, boom. Now, in this market environment, we haven't really had too many. The past 2 days, we had a couple 100%ers, but it's not looking great for those types of moves. Eventually, though, the market will filter back to some sort of, I don't want to say that's normal, but I want to say some sort of kind of excitement again in small cap land, whether it's a theme, whether it's one stock that ignites a crowd, whether a stock goes 1,000%. I've been saying we need a 1,000% runner to ignite the fire and to ignite the small cap crowd again. But until then, you have your pumps here and there. Some stuff gets good news, FDA approvals, this and that, phase 3 data, but outside of that, there's just, it's like, okay, who cares? There's just not enough. There hasn't been one monster that squeezed shorts so bad that blew people up, margin calls for, there hasn't been a monster like that to ignite the flame yet. So until we get there, it's going to be this back and forth, or the market just kind of lifts everything up, but the market needs to be very, very strong, and it's been very choppy as of last week. All right, so the quick thing, SXTC, nothing against this one, but it's a similar situation, right? This one, from what my understanding, from what I saw last week, was getting that pump crowd, right? Was getting that kind of pump crowd, talk in Discord groups, Twitter, and whatnot, from what I can just recall. Just basically, I remember looking at it on, I think Thursday or Friday at some point. And so, yeah, is the risk reward decent down here? Yeah, but does that crowd being behind it kind of help? If you're in very, very low, it could be a good thing. But it could be a good setup. I mean, honestly, it could be a nice bounce play. And, you need these things. I mean, if they go 5 cents, you make a good chunk of change. 5 cents from here, if we do the math, it's like 25%. So it's not a bad play, honestly, as long as this thing holds up around. I would want to see this thing holding 18 cents and, risk it to 18 cents and look for taking profits up towards maybe 25, 30, maybe even more if we get it right. Personally, I just don't like the crowded trades because when you get a lot of people in the trades, as long as you manage your risk, it's fine. But personally, I'm just not a huge fan of jumping along into things that have already been talked about somewhere else by big followings or groups or big discords and stuff like that. Just kind of how I feel about things. Got burned super bad on one of those, whether I understood the play, knew that I liked the play for the recovery kind of trade last year or in the summer, but it was one of those plays that was like heavily talked about on social media, heavily talked about, kind of pumped in a sense. And I got in towards the top. At the time, I thought there was more room to recover, but then reverse split offering, if you guys know the deal, AHT, it was like stupid because I knew that, hey, like this is a terrible idea in terms of getting in now. You're up so much off the lows, but I felt like there was more to go, and then you get burned. So just be careful when you see things that are up huge off lows. Just make sure you understand your risk reward, and you've got to get out at a specified level. That is your max risk, and that is it. Don't question yourself if you're going to play something like that. All right. It's different. I understand it's tough. It's because when you have like a fundamental play or like a stock that's at the bottom, at its new low, it's making 2-year lows, right? The company's revenues are going up, the earnings are getting better, and the cash position is nice and strong. It's tough to cut something when it's dropping off. I understand. I'm 100% with you there on those plays. But if you're in something that's not a fundamental play, that's a very momentum-based trade, you've got to have tight risk management when you're buying up after something's made a big run. DraftKings in general for personal or for leading gambling, but that 15-20 range is looking nice for long. Let's look at DraftKings. I like Penn personally. The thing is, let's see how these are kind of potentially showing some bottoms here. It hit this level that we had, this $20 or so, but under 20 I definitely think is a nice spot. Look at the volume too, is really kind of come on here on DraftKings the past couple of days too, even though we've been downtrending, the volume has been kind of slowly elevating, but now the volume is really coming in. This could be a sign of that reversal. We can bounce back up to $30 pretty quick on DraftKings. So don't be surprised, especially with some of these other names. But that gets me into what I want to talk about, those 3 stocks. So let's talk about the first 2. First one is CRM. And there's a bunch you can kind of put under these categories. I think Roblox is another one as well you can toss onto this list. But CRM looks really good as long as it holds up in the $200 range. I don't want to see it dropping below $200. Obviously, that's a $22 range from here, ideally. I would take if I'm looking to trade this, I would take a starter position here. And if it drops down into the lows of last week, take a position there at like 210. And if it falls under last week's lows, probably cut it. Obviously, depends on the market conditions, but I think we can get a good move back up to that 250-ish range. I think we could very well see 250 on this thing. So that's what I kind of like in terms of a bounce play with the market. These are 3 stocks. These is one of the 3 stocks I really like watching, but same exact side here is if we see downside and the market gets flushed this week, then CRM under $200, this could drop a good bit. So under $200, I like that for a short idea. Or really under last week's lows, you are getting back into areas of prior support, so be careful, but we could be looking at a flush out move for that. Now, better risk reward would be potentially shorting it up here towards that 225, and as long as we can't regain 225, cutting it off within a $3 stop. So that's one way to play it as well, but I'd be waiting on tomorrow's open and see how the market goes tomorrow to kind of get a better feel for that type of stuff and see how things setting up market-wise. Next one is Affirm. Same exact setup almost in a sense. Huge sell-off, very, very close to recent lows, right? Now, the all-time lows here, this is a great stock, I think, to play either way. Affirm can bounce back to $90 with a strong market very, very fast. I know it's a $30 move, but look where it came from, right? This can bounce back to $90 from the lows, and no one will blink an eye if it just kind of sells back off after that, right? So that's still an 80% move from the lows, which is pretty incredible. But if we do drop below last week's lows, that's lining up very, very close to that 46.50, which are the lows from May. That's a short, probably takes you down to 40. Who knows? We can even see 30s with a weak market on Affirm. So that's a good idea there as well, just playing the chart based on that support level. As long as it holds, I like it long, but the market's got to cooperate. If the market doesn't cooperate, boom, this is a backside play and a flush out trade, I think, for sure. Now, next thing, before we dive into that last stock, I want to pull this up really quick right here. Zero hedge, I want to pull this up because I just saw a tweet recently. Here it is. Everyone is hedged for a crash. We have been averaging $1 trillion worth of puts per day, largest on record. So take a look at this. This is really interesting to look at and just to kind of get a feel for people being bullish, bearish, and whatnot. And last time now we had the amount of puts that are being bought right now. See how we're kind of spiking up here, which is insane, to that $1 trillion level. This is in billions on the left-hand side. So $1 trillion, right? And so last time we got even close was back in here. Looks like that was December. That was the lows from December, okay? But also this is the pandemic crash. So last big spike like this is the pandemic crash. Now I would imagine, right, does this mean anything? No. But we are probably not going to see a massive crash until no one sees it coming. That's the whole idea. The crash isn't a crash, right? When everyone sees it coming and is playing and has got puts and is going to make a ton of money on the backside. So this fits that narrative. I know we've been talking about some bigger picture macro level views. There's a lot of people who say this and that and this. We were talking about David Hunter, one of these guys who has a crazy forecast, but he did call this recent correction pretty closely. And then he believes we're going to see one of the most insane melt ups in the next 3 to 6 months, followed by one of the biggest crashes in history. Now, again, it would make sense that I like that approach better in terms of, I'm not saying that is going to be exactly what happens. I have no idea. I don't think no one knows, right? He doesn't know anything either, right? He's just making a forecast. But what's really cool about it is that it makes a lot more logical sense to me. Because if we do melt up and the market kind of lifts higher and goes parabolic for a sense for a little bit, and no one's buying puts, these charts are all pulling back down. Everyone's bullish. That's when we start to load the puts or start looking at hedging ourselves for the downside. Because that is where I could see a legitimate crash come almost out of nowhere, even though we kind of have a lot of reasons why the markets and valuations shouldn't be this high, inflation fears and whatnot, right? But we need to be pushing up. We can't have all this fear for a true, I would say, crash. It kind of needs to blindside people. And then the people who are like, okay, well, no, just buy the dip, right? We're going to obviously bounce back. Kind of like what we're seeing right now. That's when I think we'll see it. So if I pull up SPY and let's say that this dip gets bought up, this was the potential crash. Everyone's like, okay, here we go, downside. If we don't fall off and we don't drop below the lows from last week, and we don't crash in the next couple of weeks, and this dip gets bought up and we're back to all-time highs in like a month or 2 months, right? And we go higher and higher and higher. Next bigger dip, you're going to have everyone saying, well, no, this dip will get bought up again. Once everyone starts flipping their view to now buying every dip instead of, wait a second, buying puts on each dip, because again, we talked about this too. Why buy puts now when you could buy puts at the highs, right? Obviously, there are reasons to believe, okay, the trend has changed. We've pulled back from highs. There's some more fear. But I think that fear doesn't align very, very well with the hedge or the downside. The more fear there is, that's the more people that they're on the exact same side of a trade. And we know how that works in the stock market. The more people on one side of a trade, to a degree, obviously AMC and GameStop are outliers, right? But the more people on one side of a trade, the less likely that it works out that easily, right? So I think that's something to think about going forward. All right, now I want to pull up the insider buys sheet. I want to pull up Open Insider really quick. And I want to pull up a specific stock that's been getting some attention. Here it is, AESE. Where is that? I just saw it. Here it is. So AESE, United Pastures LLC, a 10% owner, they own over 10% of the shares, or 10% of the company, I believe. So if we take a look at this, since November, or really actually go back to December, they've been buying in pretty big chunks. They increased their position by 23% and have slowly added smaller chunks since then. But they bought in the 181s, 187s, 190, 179, 181. So we have some insider sells up here, 4, 3, 275, even a 2 for a decent chunk of shares. But if we go back to the chart on AESC, let's pull it up. This is what I think it's just worth to keep on your radar just because there's been a lot of action here and it's been kind of chopping and consolidating for a little bit. So broadening things out here, here's the chart, and it doesn't look like a lot of small caps. Why? Because if this was a lot like this chart looked like a lot of small caps, what would we see? We would see something like this. We'd see someone falling off like this, which we're not seeing. So something's going on here. It's holding up, okay? Now you go back to November. This got a lot of attention and started getting, I want to say, some some pumpy type traction. It started getting some more Twitter attention, and look at the volume here. There may have been some news flow as well. And the thing was popping on up, and that happened actually mid-November. Well, what's key about mid-November, guys? Mid-November is literally when we can go back to pretty much any small cap stock that you want to look up, any high growth stock, and see that that is almost exactly when the destruction begins. Okay? In terms of these things are selling off. And so we did get that. But then we held up. Now we're holding up. So as long as this thing holds up in that mid 170-ish area, this is something to think about here in terms of a long, especially if the market strengthens itself right on up. So I kind of like, as long as this thing holds up, I don't want to see it breaking down new lows. You want to see how it's closed. See how it's closed up here? It's dipped down to 154, but it closed that day at 185. It's never closed a candlestick in the past couple of months, really below like 170. So as long as we stay above 170, I say this is solid. So just keep that in mind. Your risk could be 170. A close below that, watch it. If it doesn't bounce back, cut it. And that's the idea behind this. So if the market firms up, this can be one of those small caps. We have what's the market cap on this thing? Market cap is 72 million. It's one to look deeper into, do your own due diligence, and build out potentially your own trading plan. It's on my list because I saw those insider buys the past couple of weeks, and it just keeps popping up. So something worth looking at, I think. All right. Let's see. I'm going to scroll through. Sorry if I'm missing some stuff. Most charts 1 day time frame oversold. Looking back, testing. Hindsight. Well, one of them. Yeah, here's the thing. This is how it kind of goes. It really, in the moment, it's very easy to get freaked out. If we look at this, let's look at the S&P. Overall, right, this is technically, let's look at the RSI. I'll pull up the RSI and we can see what the RSI says. Is it technically oversold? It was oversold last week. Now the RSI is at 38. So below 30 is technically oversold on the RSI. But after the close, I guess we bounced back pretty strong on Friday. But yeah, a lot of stuff's oversold. So this could easily be, we look back in 3 weeks and go, wow, this is just an easy, dip buy, and we're back to highs. We're back up into that 470 range or 460s. And it's like, okay, who cares? So that's one thing I think is worth, at least just thinking about, obviously, with risk parameters in place in terms of if we start falling below 427, 426, be careful, 420. If we fall below those levels this week, then I would be very intrigued to look at downside down towards like 410, even $400 is not out of the question, I would say. But again, that would be a pretty big move back down. So we'll see. I would imagine this area is going to hold up as support for now, unless we get some news to drive us in the other direction this week. PDD support. Let's take a look at PDD. PDD, okay, this thing has come down, and it did dip down to 47.67, so it's actually right in range, I think, right in here. I'll draw a little box. I think it's useful at least to look at it this way. So here's kind of the levels. Here are the lows. It bought up, double bottom here at like $52. It bounced right there. Then it came below 52, hit 47.67, bounced back up to 70s. Now it's back down here sub 50. Now it closed at 53, but it dipped below 50. Here we go. I kind of like that. Again, that's a solid trade in this zone, in this kind of box. If you're playing this thing, with respect to the lows of the 47.67, this could be kind of your inverse head and shoulder. This actually looks very potentially like an inverse head and shoulders, where you have, if you think about a head and shoulders pattern, which is a bearish pattern, you have a left shoulder, or you have a shoulder, and then you have the head, and then you have the next shoulder. And the shoulders are like relative highs, but they aren't as high as the middle head. Here's the opposite, where you kind of have the inverse, where the head's lower, and each of these kind of shoulders, or inverse, I guess, if you want to call them that, are a little bit higher than the head, but they don't go below. So as long as we don't go below that 47.67, this could be a bounce back play, at least I would say up to the 60 range, back to the kind of the relative highs of this consolidation, and if not for more. I kind of like that. That chart doesn't look too bad if you ask me. Okay. DWAC, I'm also surprised Apple is running where Microsoft and Tesla got penalized. Here's the thing. Apple had some good earnings. I know every company was kind of different. Apple did hold up really, really well to finish off last week. Back at 170 now. Earnings, to be honest, for OEIC, at least as of late, I don't want to say it's a crapshoot, but it's almost like a crapshoot because it really depends on a lot of different things, sentiment-based. And if Apple was great, if Apple didn't beat the way it did, if it came in just above or like right in line, we may not be talking about Apple the same way we are now. Honestly, I just think that Apple it almost saved the market. It felt like, based on how it didn't get killed. But it's tough to say with earnings these days. It really is. MSOS is a good one to slowly accumulate longer. Yeah, I think that's a great idea for someone who's a longer term. MSOS is the Cannabis ETF, and they pretty much own a bunch of the OTC US cannabis plays. This thing actually just dropped below $20. This is something just, again, right? If you believe in this space going forward, when we finally get these companies to uplist off the OTC, at some point we're going to need policy to change in the government-wise, which is taking forever, and who knows how long it takes. But do you want to be buying in after that happens? No, you want to be buying in now. And so you're probably going to have a crazy frenzy when everyone kind of shifts away from being able to just buy like Sundial Growers, SNDL, Tilray, and whatever, all those names that are out there these days in Canada. And everyone kind of jumps into kind of these US names if they uplist to some of the major exchanges from the OTC. This ETF covers those stocks. They own a lot of those OTC stocks. So this is, I think at some point, whether it's next year, whether it's later this year, whether it's in 2024, 2025, there's going to be madness when that money flow or that money shift happens, because you also have, funds who are restricted in a sense from being able to buy these OTCs due to other restrictions based on their fund and whatever. And so you're going to get a lot more institutional money, where you're also going to get a lot more retail money flowing into these OTCs that will eventually uplist with due time. But who knows? Honestly, who knows when that's going to happen? So in the meantime, what you could do is kind of start funneling some money into MSOS. Pick a couple US cannabis names if you have OTC access. TD Ameritrade, Schwab, E-Trade, I think has it. Whatever brokerage platform you want to use that has OTC access, and find your favorite 3 US cannabis stocks and just go from there. I think that's a great idea. It's an IRA worthy type of position, I would say, if you believe in that space. Bctx, it could be a good. Yeah, let's take a look at Bctx. Bctx is one of my. Looking back, I had this guy back in here before the initial spike. So I had this thing back in the 3s, or even I was buying in the 2s, and the thing popped to the 9, which was insane that day. But here's the thing, it's back into this spot. Here's the lows from Monday, 542. We kind of have a gap to fill right here. It's not terrible if you look at it this way. But here's kind of the range of it. We got to break above. It's tough to say right in here. I would say Friday's low, 565. I wouldn't want to drop much below that. With my risk being pretty tight below 550 if I was going to take a position here. But then if you're looking at it, up towards $7 is probably a pretty good target, at least first target to have from these levels. So if you're going to risk yourself like 50 cents, you can be looking at a $1.10, profit target to the upside. So that's a pretty good risk reward on just, initially. And then if you want to hold for more for a bigger possible move, if we get it on BCTX. ENPH, yeah, that's another one too. Enphase. I like that one a lot, to be honest with you guys. Look at this. Look at this chart. I mean, this is a very similar chart to Affirm, Salesforce, even look at like Roblox. They're all very, very similar charts. I mean, this is just, look at this. Right into this range, right into this zone right here. If we hold these levels from this past week, I like it. So if we don't, this could be a good short. If we see further weakness in the market, I know it's down a lot and it would be tough for me to want to go short, but for a short-term trade idea, for a day trade, or something like that, or for a short-term swing, if we drop below 110, this probably comes down to $100, I would say, at a minimum, if not more. So if it can't get saved right here. So that's kind of where we're sitting at right here, is the lows from this past week is kind of like your risk. And then I guess you can look back to this area right here back into May as your next secondary kind of risk zone. But I like that. This is a stock to potentially I think it's a good stock long-term. It's up a ton overall past couple of years. So the lower you can get it, the better. But, I don't think it's going anywhere, in the long term. But then again, right, a lot of these stocks, could easily pull back another 25% or more if the market stays shaky. We'll still see downside for unprofitable companies and certain with uncertain future profitability. They'll also have an issue. They'll have to issue shares. Yeah. That's the game with a lot of these super small caps or penny stocks too. It's like you're kind of in an environment where these things are not going to keep, to a degree, right? you can kind of stay afloat, but at some point, you're going to need to raise capital. You're going to need to raise this, you're going to raise that. And so if you can't stay afloat and there's no volume and no one's buying your shares, it's going to be very, very difficult to stay, listed in those circumstances. This could be, if this kind of continues, this downside for small caps for a little bit longer, a couple more months, it's going to be pretty deadly for a lot of stocks. It really can be. So it's something to think about, if you have no revenue, if you have really no path to profitability anytime soon, and you're kind of just going after different drug candidates, it's kind of a tough cycle to be in unless the market's really hot and you can keep, raising capital. Now, a lot of stocks, a lot of companies, they did, and hopefully they did a good job of that in the past, 2 years when things were hot, and they were able to raise capital off offerings and whatnot. And a lot of stocks, it's funny, there was a period of time where offerings were good. It was a dip. That's what it was. And so these offerings, they get bought up like crazy. And ultimately, that's everyone was like, oh, it's just a dip. And, most retail traders kind of jumped right back in and just things ran up. That's not happening anymore, for sure. Cells, heavy shorted low floater. Let's see, cells. CELZ. Let's see where it's sitting up. He'll clearly be got resistance at the 50 SMA. So look at that. Look at how clear that has been. This blue line right here has literally been resistance. Got a spike up here, fell off. Spiked up, got close, fell off. Spiked up here, fell off. So it's got to clear that. When this clears that 50 SMA and starts to hold up, that's when I would maybe get interested in a bigger move potential there. My only problem is that, I don't know, what else is the story here outside it being a low float, outside it being a highly shorted stock? What else? Is there any more to that story? Because if there's not, and they're dead for cash, it's a 13 million market cap. I mean, how much? What could be going on here? If they got no cash and they got to raise, any spike, any pop, they could be looking to raise. I don't know if they have an offer or an S3 on file or anything like that, but they could be looking to raise. So personally, yeah, the risk reward here is good. But you got resistance right above us right here. So 265 is your resistance right now, that 50 SMA. So, all the lows are here at this 158. So yeah, I guess, but it could be one to look to accumulate as long as it doesn't drop below those lows and go lower. If you like the highly shorted stocks and the short float percentage plays, they have been doing pretty well. I can't deny that. Fisker, DM. Let's look at DM and Fisker. Desktop metal, how is this thing? Oh man, this thing is getting killed. Let's look at FinViz. I'm curious how this is setting up on FinViz, or at least what it looks like. So DM, desktop metal, what do we got? Price of sales is still 15. Cash per share 1.46, pretty decent. They got a good amount of cash, which is good. They got a couple $1 million in cash, or a couple $100 million in cash, which you like to see. This has been downtrending for a long time. I haven't looked into their recent earnings and whatnot, but this could be an interesting one to think about. Desktop Metal, last article here. Desktop Metal can't seem to print a bullish case for itself. That's a great one to start off with. And it's technically in the penny stock, I guess, category. It's fallen down, but it's a small cap. It's a $1 billion market cap play. So we kind of had a little bit of interesting, buying last. Let's take a look at the volume here. The volume was a little bit accelerated towards the end of last 2 weeks ago, and then this past week, not really, but if it can hold the 325, is a decent idea, but I don't know. It can easily, if small caps or if the market stays kind of weak, this is easily going to continue that downtrend. And again, we were talking earlier about that mid-November time frame, guys. Where in this chart is mid-November? Right here. Literally, it had a pop in early November, popped up, and then boom, they had earnings, and then from that point, this thing, from that pullback after earnings, this thing has come down another 50%, which is pretty nuts after it was down a lot as it was. So at some point, these are going to, you could be stalking these things for bounces all the time or snagging, shares here and there, but it's just been, a deadly recipe as of late. Fisker, let's see Fisker. I don't know where it's under 10 yet, or is it maybe it is just above 10. It's 1045. Okay. Fisker has come down a lot. Had this little trend line that I drew right here. It broke that trend, cracked that trend, and fell off. So Fisker is in a spot that I do like. Just noise, cancel the noise. If you cancel out all the noise, what are we looking at here? The exact same thing That's been happening in a broader time frame. You can't get, super concerned about day to day, week to week, but broader time frame, right? Every time Fisker has dipped below 10, we have seen some big bounce backs. Look at the last time. Well, this is the SPAC days after it went public and they went to the ticker change and all that stuff. This went, 160% from those lows. Not saying it's going to happen again, but this from these lows back in here in May, 100% from the lows right now. If we bounce back up into the lower, consolidation range, a 30 to 40% move is not out of the question if we get back up over $13. So I like it. Again, they don't have production till the end of this year. So like I've said, many, many times, this is going to be one of those stocks that just kind of bounces around until that production. You're going to have periods of time where the market's weak, and because they have no cars on the road and because other EVs are getting hit, they're going to get hit. When EVs are hot, they're probably going to be fairly hot. They're going to bounce back, and they're going to have some positive news about, oh, here, look at our reservations. They're up a lot. And then they're going to come back and say, oh, well, we got to let's do an offering and raise capital. And then it's going to be kind of the ups and downs until they get cars on the road and everyone either likes them, hates them, or whatever. We're going to be in that limbo. So relatively speaking, if you're just going to play off the chart, we're in a pretty good risk reward zone right now. You can risk it down to the lows because the way I would say is you can play it like this. Buy calls, buy shares. Honestly, buying shares is probably better than calls because the stock is going to be volatile enough. Buy shares, risk it to 870. If we close under 870, 2 days in a row, you're out. Okay? You're out. That's it. Simple as that. So from here, if we just take a look from where we're at right now, 15%. So if you buy shares right now at 1045, and then, let's say you're going to buy in 2 or 3 chunks, buy some down at like, 975 and then 875 is your last chunk. Your average will be roughly around 975 for a bounce back trade. And if it drops below, your average is at 975, and from 975 to the lows, you're only going to be down, 8 to 9%. So who cares? 10% the max, which is not that bad. With the potential upside here, we've seen 30, 40%. I like it, then potentially more if it wants to go and do it. It used to what it's done in the past of go on these 100% runs off of these big dips. Let's see. NVNO. Look at this chart. Why does this one sound familiar? Or this? Why do I have lines here? So I must have. This must be either a ticker change or something happened here. This is sitting up here. 520 is the low from this past week, and it's kind of held that. Also happens to be a level right there. $5. $5 is kind of my level, I would say. If it holds 5, great. If it can't hold 5, don't mess with it. Market cap is 50 million unless you have a bigger picture view on this thing or hold for a catalyst. But if it holds $5, that's great. If it holds 520, even better on that one. Been loading on PLTR below 15. I think that's going to be a decent one just to kind of hold on to. I don't think that's going to be something that we can really tell. There's a lot of potential there, and a lot of people love this thing for a long-term growth play. But, while things have been selling off, here's your opportunity to kind of add some shares lower and kind of shut up and be quiet and let it do its thing in the next couple of years. Give it, you got to give it time though on these types of plays and these longer-term, technology type plays, and they have some crazy growth potential. But if we go into a period of time where, if things do kind of work out or filter out in the next couple of months and years, and we go into a time period where growth doesn't do that well, then, these are going to be stocks that you can have opportunity to load up and add into for, however long you want to set yourself up for the future. But, as long as you have a longer term vision on these things, and that's kind of where I see Tesla at right now, personally. Obviously there's a lot of stocks that came from. There's probably plenty more where that came from that you may find that you like better than Tesla, that offer much more upside and better risk reward, whatever. But Tesla, one of those stocks that, hey, this thing starts dropping off and it gets pretty ugly and it gets pretty nasty and it goes down a lot. I think Tesla's one of those stocks that I think will do just fine over the next, 5-10 years. I think it won't have a problem. Dare I say, an Apple, kind of a setup, an Amazon, a Facebook, I guess Meta now, it's going to be something like that on the broader time scale. So it's kind of how I see that thing. And so it's one that I feel pretty confident about adding into my IRA and forgetting about, not really worrying about too much and letting it do its thing. And if I have cash available and then the thing is down a lot, add some more, or dollar cost average into. So I think the same strategy with PLTR is probably not a bad idea, no matter the market conditions for now. Skills highly shorted and it's dragging down. Yeah, again, right? These things, they can be highly shorted for a long time. hit new lows, 403. 403. We talked about skills. We've been talking about skills, I think, as of late. This thing at some point on a bounce back will have a really good upside, but I don't know, man. Let's take a look at the FinViz right here on skills. Short float is nice. This is a pretty high short float right there on FinViz right now, especially these days. We're talking about a market cap of 1.74, yeah, price to sales of 5.07, and price to earnings of 2.12. This is getting back to, even as a growth name, a lot better value compared to some other growth names right now. So this is a stock that, to be honest with you, isn't as dangerous, I think, down here as some may think of it, just because it's a sub $5 stock. Market cap is 1.74 billion. I think it's actually, honestly, I would want to look into the fundamentals a little bit deeper, the CEO and the recent earnings and the projections and all that good stuff. But this down here, man, this looks pretty enticing, and I think I feel like we've been saying that for a while. But the lower this thing goes, the more enticing I think it gets. Anything as of late, November 3rd, price target by Citigroup of a 23. Yeah, I guess whatever. And at the time, the stock was out like 12. So yeah, I mean, from here to 23 would be crazy, but it could still. I mean, it's really just with the market. The market has more pressure. It's going to have some pressure. IWM probably all-time highs. And it's actually hilarious because I was just going to pull up IWM, like right as you said that. IWM all-time highs in a month. Literally, I wouldn't be surprised, But here's the thing, right? For skills, for example, as one of those ideas, here's what you want to look at. If you're deeply invested into skills and you're like, well, this doesn't make any sense, right? It's come down so much. There's this potential. There's the growth. There's that. But here's the thing. It's IWM, right? Here's small caps. If this stays, nasty, under 200, really under 205, it's not going to do anything. But if this gets back over 205 and starts bouncing back up, gets to the top of the range, then I would imagine skills is going to have a nice bounce off the lows. So this is what you want to be looking at realistically for a lot of these small caps, these growth names. I think IWM is a great place to look at for that. I think it will be funny for IWM. This is the ultimate fake out, right? Where you have a breakdown below support. Okay, everyone's looking to the left and saying, "Wow, it's coming down to 170. Look out! Here goes IWM." Now, it got like halfway there last week, which is pretty impressive as it is. But if it just snaps right back up, and traps everybody who went short, snaps back up, and then boom, that could be the fuel for this thing to break out to new highs. Honestly, wouldn't be surprised if in 2 months we're looking at IWM up in the 240s, 250s. It would be wild, but I wouldn't be surprised. So, are you going to trade this week? Yeah, I'm actually home this week. Pretty much, I should be good to go this week in terms of traveling and stuff. Just on Friday, Steve Aoki is coming to town, so we have that Friday night. It's Friday night though, and then Saturday morning I'm leaving like at 5 or 6 o'clock, and I'm heading out to it's like a whole half day of traveling to Montana for Saturday through like Wednesday of next week or something like that. So of the next week. So that should be fun. But that said, I'm gonna look back to futures really quick. Let's take a look at these guys. And they've actually come back a little bit. They've actually come up. They're not as red. So we'll see. Futures are just slightly red. Not even 0.25%. Not even 0.25%. So this can all change. It could be green by 1% tomorrow morning, for all we know. But that's it, guys. I'm gonna wrap things up here. Hopefully this was helpful. And again, I'll have a live stream tomorrow afternoon. Roughly 2 p.m. Last like 2 hours of the close or so. Roughly be that time frame. The market closed, and then we'll see what things are doing. We'll see how things are shaping up. I appreciate everyone for tuning